if this week's market sell-off wasn't spooky enough for you, there's a new frightening stat creeping out of the housing market. Our Diana Olick joins us now with the details. Diana.
Yeah, Melissa, even as jobs slowly come back and the housing market sets records for sales and prices, a huge swath of American consumers are still struggling to make their housing payments, about 12 million. That's how many are behind on their monthly mortgage or rent payments. Renters are struggling the most, with more than 8 million behind. In addition, close to 6 million renters said they had no confidence at all, zero, that they could pay next month's rent, and that's according to the census. Renters, who tend to be on the lower end of the pay scale, have been disproportionately hard hit by the pandemic because they've seen more job losses. Now, other than an eviction moratorium that expires at the end of December and some state rental assistance programs, there has been no relief from the federal government for renters since the increased unemployment benefits expired. For homeowners, there are government and private sector mortgage bailout programs where borrowers can delay their payments for up to a year. The plans are offered, though, in 3-month increments with possible extensions. Now, a report out today from Black Knight found the number of borrowers in those programs increased by 33,000 to just over 3 million last week, and that's after they had been improving. That is 5.7% of all active mortgages. Another 500,000 are behind, but not in any bailout. The vast majority of borrowers are delaying their payments, have extended their terms at least once. So it's just not getting any better, Melissa.
All right, Diana. Thank you, Diana Olick. This is a really interesting story that we wanted to bring to you guys, Brian Kelly, because this means that the numbers may not tell us the full story of how much in pain the consumers really are because they have this sort of moratorium protection from paying their rent. But it also tells you that someone is not getting paid along this chain. If rent is not being paid, landlords are in forbearance, banks are not getting their mortgage payments. So there's multiple ways to go here.
Yeah, so this highlights the K-shaped recovery that we're in. Those people who own assets and stocks and already own their homes and have a job that they can work from home are okay. But those who can't and have been laid off, they have no way to do it. And as you pointed out, it becomes this daisy chain of payments. And I suspect that's why the banks haven't really rallied as much with the steepening in the yield curve. It's great you can make all kinds of money on an interest payment, but if you don't get any of the money back, that doesn't help you out. And I would suspect that that gets worse as we get into the winter and spring. It's why I think there's some turbulence coming. And it's also why stimulus was so critical. You needed to get that out there. Now we're probably looking at March for stimulus. That's going to just exacerbate this trend.
Yeah, Bonawyn, where's the trade in here?
Yeah, I mean, I think you've got to differentiate between residential and commercial-backed mortgages here. I think that's really what it's going to boil down to. I expect the commercial side to be in better shape. They're going to be, as we've spoken many times, they're going to be larger, more asset-backed, able to source liquidity. They're just going to be in a much better, stronger financial situation. The residential side, I think this is what really this speaks to. Those people, I expect that to be kind of a domino effect. Keep in mind that people's homes are typically their largest asset. Now, if you're going to lose your home or you're going to have your credit damaged because you're falling behind in payments, you are going to be struggling to get access to credit at the very time you need it because you're cash strapped. I think that's the way I'm looking at it, commercial versus residential.
Yeah, quick thoughts, Jeff?
I think that the trade, if we're looking at where you might want to play here, even given the statistics, I think the builders are still a very interesting place to be. You know, I think about trends that were already in place before COVID, but that have now been accelerated. And I think housing is one of those. And if you look at the pent-up demand in the younger demographic, I think it's like 2.5 years before that gets filled. So the builders are the ones that are going to be there to ease that supply constraint. So I look at companies like D.R. Horton, Lennar at 9 to 10 times forward earnings, and I still think there's a trade there. And I would hedge it with financials exposed to mortgages, because if you get rates rising, that trade works. If rates stay low, I think housing still works.
All right.
Shepard Smith here. Thanks for watching CNBC on YouTube.